Hi guys, this is Alfred from binaryoptionstutor.com. Today or tonight, as the case may be, we're going to be talking about the basics of candlestick charting, and we're going to be talking some of the basics of price action. I'm going to try and cover five things. And the good news is when you can conceptualize these five things, you're going to know a lot of the essentials of what you need to know about price action and about the activities that are conducted every day that repeat themselves, these patterns every day in the market on different time frames. Yes, on different time frames, but these same things happen in the market over and over again. You're going to know what you need to know in order to trade profitably and start to put these things together in the market. This price in and of itself, a lot of people that are PA traders, they like to um, believe that price in and of itself is everything. And it's not, by my estimation, it's not the entire. It's part of the show, but it's not the entire show. So, with that said, we're gonna quote Shakespeare here and do this like Brutus and just get right to it. Okay, let's start with the candles themselves. This is a Japanese candlestick chart. Japanese candlesticks were developed in the 1600s by the Japanese, of course, and originally by rice traders. This chart here, my brother David put together for me. It's just a very basic naked chart. It's got green and it's got red candles, just like what I started with uh, before we had MT4. There just was no MT4. I know the, I go a long ways back. Okay, and first we're going to talk about the two emotions that are here in the market, and those emotions are greed and fear. These are human emotions. We're all humans. I don't think there's any aliens tuning in. I know there's a guy somewhere around here on YouTube like think he's an alien. I don't know. Maybe the dude is. I don't know. I don't proclaim to be an alien though. Um, if he's not tuning in, then you know, with that exception, we're all humans. So I like to look at the market from a human perspective, existentially. There goes another big word for today. Maybe I could start doing that on the regular. Um, we're seeing greed as the market begins to go up here, uh, and then we're seeing fear with these red candles as the market begins to go down. So now we've covered the two emotions that run every market, and that's greed and that's fear. I used to hear this all the time, but I don't hear a lot of people really getting back to the core and covering these two emotions anymore. Not as much as it used to be, in my opinion, recently. Okay, let's talk a little bit about these candles a little bit deeper. Let's go a little deeper on our study. I'm gonna teach you guys something here. The new guys, you may have not heard this, but here we open gap up. A lot of people who are gap traders, that's not me. I didn't never go guru on gap trading. Initially, I avoided gaps altogether. They were kind of spooky to me. But when there's this difference between where the market closed and where the market opened on another day, that's a gap. And generally, people will say at a point the market's going to come back in and the market's going to fill that gap. And later on here on our chart, we do see that market coming in and filling that gap there. Also, generally, when you open gap up, like we've opened here, gap up, and the market's gapping up, a lot of guys are going to believe that the, that is a precursor to a market that's going to trend up. Now that actually did work here, and that's why I picked this spot in the market. This is textbook. This is working textbook. But I want to explain. Sometimes I'm going to bring up general things, and I'm going to bring up general jargon, and I don't want to discredit anyone that believes that I'm not here to discredit anyone at all. I respect other people's opinions and the other ways that guys are trading the markets. And I hope that more guys can respect my opinions and the way I'm trading the markets. What I am here to explain though is no matter anytime you go to believing that what you're hearing is gospel, and there are a lot of guys, uh, let's just say marketing, and they will share something as if it's gospel. Anything and everything happens on the market every day. Yes, there are patterns, but Alfred, you just said these same patterns happen every day. Of course they do. The market, that's why I cover these patterns, because no matter what happens on the market, you're going to see these two emotions, fear and greed. Now, let's talk about the three things the market can do every day, because that's also right here in this area. The market can go up, and we see the market going up. The market can stay the same, and we see these wicks here as the market consolidates, and the market can go down. And we see the market trending down right there. Now, for those very, very new, I'm going to talk about some structure on these Japanese candles. Right here, where the market where the market opens is at the top of every red candle. Where the market closes is at the bottom of every red candle. And these candles are representing a downturn in that interval on the market. Now, there's totally the opposite. At the bottom is where the market opened, and at the top is where the market closed when we've got a green candle. So hopefully as I'm looking at these candles, and I hope to instill into some of the viewers, as I'm looking at these candles, I'm also imagining time in my mind and what is happening over that span of time. These 15 minutes here, we just see the market just trending and riding up. And I can see from one candle to another that continuation in that trend. Now, in some of these candles, there's this little area poking out. You'll see it to the top, you'll see it to the bottom, is illustrated here on these two candles right here. That's called a wick, and that is when prices inside of that interval break outside of the open and the close. If price inside of an interval was 80 to 100, but at somewhere inside of that same 5 minutes, price was 110, that will be represented right here in this wick to the upside. Same thing if price were, let's say 80 to 100, but at some point within there, price went down to 65, that would be represented to the bottom side on this wick right here. That's all there is to that. I'm covering very basic and elementary things because I know that I've got some viewers very, very new to trading, and that's really my purpose of doing these very basic videos. I'm also trying to start really from scratch, and sometimes in this world where we have so much technology and so much information, there's this it's paralyzing, and you don't have anything to really anchor on to. Trying to provide some anchors, and these anchors are that the market can go up, the market can generally remain the same, and the market can go down. And there are two emotions in the market, and that's fear and that's greed. Now, let's take it a little deeper and look at these candles. Uh, is emotions, but we're going to try and look a little deeper. I like to do the deeper studies, guys. I got to admit, I got very early on, I used to love to read. When I was a kid, I used to love to read Encyclopedia Brown. Nobody probably remembers Encyclopedia Brown, but you know, some people maybe. I don't know. Eventually, maybe somebody will come to this video and say, I remember it. I don't know, but I love to read Encyclopedia Brown. I love to read Sherlock Holmes. Um, the Fed chairman, former Fed chairman Alan Greenspan, really got involved in economics because it really started from his love of the uh, baseball cards, and that's really what got him involved in statistics and math, in which led to his career in economics and being a Fed chairman. So we all get started somewhere, but I got started uh, probably what spurred on a lot of how I got so involved in trading was just loving the idea of being able to develop a hypothesis and watch that hypothesis play out in the market. And these are some of the core fundamental things that I use to help me build a plan, to help me build a hypothesis. And that's really more of my style of trading. That's how we trade at Binary Options Tutor. That's how we um, share ideas and information, not so much just a one-off uh, be all end all strategy, because the strategy is great, but the strategy is to me just part of a system and a plan, and that's what we're really trying to stress here. These are core fundamentals that I've just shared. Markets going up, markets going down, markets consolidating or generally staying the same. And you're going to find on all these different charts and all these different levels that that's all the markets will do. And even as we move our chart along here and you see the market begin to exhibit a lot of fear, continuation of these red candles, a lot of fear. You see some wicks in here, and those wicks are kind of, when I see a wick on a red candle, I think of it as like, okay, somebody's jumping up behind me and maybe they say boo, and I'm scared for a minute, but I'm not really, there's not a lot of fear there because it's not very substantive. When I see a long candle like this, and there's not much of a wick there, that gives me a hint that there's some substantive fear in the market, and that's how I'm looking at the market. Look at this wick back here. I'm sorry, this body of this candle back here. The length is very strong, and the wick is very, very short. That gave me a clue right there as I'm starting to put my plan together that there's a lot of substantive fear in the market. And so you see, if you look at things from the perspective of fear and of greed and those human emotions that we can all understand, not just numbers and jargon, that's all very fine. I'll cover numbers, I'll cover some jargon. I might mention it in passing, but I don't really use a lot of that jargon every day. If I don't cover it, I'm really only sharing what I actually trade like. So there are a lot of people who understand it a lot better, who would be better at covering it. I don't have any problem with that. But this is what gets me through the day, and that's what I'm sharing. And that's human emotions: fear, greed, the three fundamental stages of price action or market cycles, however you want to look at it. And that's the market going up, that's the market consolidation, generally staying the same, like it is in this area here, and that market going down. And that's it, ladies and gentlemen. It's been stated before. That's all, folks. And we'll be back next time, as you may have guessed, on this same bat time, same bat channel, and we'll be talking about, you guessed it, support and resistance in the first of probably maybe 2 or 3 videos, because it's going to take me a while to go. I want to talk about the different ways I draw my SR support and resistance lines, and I want to talk about support and resistance theories. This is another one of the core fundamental things you need to understand as you're going about trading the markets. If this has helped you guys in any way, please like, share, comment, subscribe. It helps me, it helps my brother, it helps us to help to spread the materials that are available on our site. There is premium content on our site, but there's also a lot of great free content that we happily share, and a lot of great free tools that we happily share with everyone on our site, at binaryoptionstutor.com. Thanks a lot, and all of you guys have a wonderful time trading the market.